Welcome to Herron Todd White's Economic and Property Market Update for June. Australia's economy continues to present a mixed picture, with the latest economic data highlighting growing differences across sectors and property markets. While annual economic growth remains relatively resilient by international standards, momentum is clearly beginning to slow. The latest national accounts showed the economy grew by 0.3% over the March quarter and 2.5% over the year. However, quarterly growth slowed sharply from the previous quarter, reflecting softer consumer spending, weaker consumer and business confidence, and the ongoing impact of higher interest rates. While overall economic growth has remained positive, growth per person actually declined over the quarter, highlighting that many households continue to feel the pressure from higher borrowing costs and the broader cost of living. Inflation remains one of the biggest challenges. Headline inflation eased slightly to 4% over the month. However, the Reserve Bank's preferred measure of underlying inflation increased by 3.6% over the year, signalling that price pressures across housing, electricity and services remain persistent. Despite these ongoing inflationary pressures, the Reserve Bank left the cash rate unchanged in June after 3 consecutive rate increases this year. While expectations for further increases have eased, the bank has made it clear inflation remains above target and further rate rises cannot yet be ruled out. The federal government's changes to negative gearing, the capital gains tax discount and self-managed superannuation funds are also adding to market uncertainty, particularly as investors assess the implications for future investment decisions. Sentiment remains well below long-term average and is beginning to influence property markets across the country. These economic conditions are now flowing through to Australia's housing market. According to Cotality, national dwelling values were unchanged during May, ending more than a year of consistent monthly growth. However, conditions continue to vary significantly depending on location and price point. Sydney, Melbourne and Canberra recorded further declines in dwelling values as higher interest rates, affordability constraints and elevated listing volumes continue to weigh on buyer demand. Meanwhile, Perth, Darwin and many regional markets continue to outperform, supported by tighter housing supply, stronger population growth and stock levels which are still low but starting to trend higher. While housing price growth is slowing, rental markets remain extremely tight. Strong population growth combined with ongoing shortages in new housing supply continue to place upward pressure on rents. National rents have now increased 5.9% over the past year, while vacancy rates remain at just 1.5%, well below long-term averages. As always, national data only tells part of the story. Property markets continue to perform very differently between regions, asset classes and price points. That's why Herron Todd White's Month in Review remains such a valuable resource, providing on-the-ground insights from Australia's largest team of independent property valuers. With market conditions expected to continue evolving over the coming months, our latest Month in Review provides timely local intelligence to help you stay ahead of changing market conditions. Thank you for watching, and we'll see you again next month.